Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lanny and Bert. The Dividend Diplomats, we have a massive company. We have a nearly $60 billion company, market cap wise, Lanny, that is getting absolutely crushed after earnings. However, the stock is still up over 100% in the last 5 years. Even with this massive price drop in the after hours, yield is now almost at 2.5%. Lanny, is this a rare opportunity to buy a fantastic dividend stock right now?
Let's find out by smashing that subscribe button. Takes 2 seconds. Give us a thumbs up. Let's get this video wild here on your Saturday gosh damn morning, guys, because the dividend freaking diplomats are here talking to you about a stock that's gotten crushed in the after hours market because we're filming this March 20th. Because, Bert, a lot of guidance was dropped, a lot of news was released that has sent this stock a tumbling down.
Oh, we're tumbling down. This has been quite the earnings season, Lanny. We're kind of in part two of the earnings season here as companies are starting to really figure out what's happening with tariffs. You might not know what's going to happen, but the uncertainty is trickling its way through Mr. Market. It's trickling its way through earnings, through guidance, through every conversation. People are talking about what impact are tariffs having, what impact is a slowdown in the economy potentially going to have on us. And man, oh man, did this giant company really feel the pain, because a big chunk of their price falling, guidance falling, it is specifically cited decrease in expected traffic from business to business activity as a result of some of the economic uncertainty.
Bert, what stock are we talking about here?
FedEx, ticker symbol FDX. And if you think about it, Lanny, it makes all the sense in the world that they're going to be negatively impacted by a slower economy, by less sales, by less cross-country shipping, because that's the name of their game. They ship, they transport goods, they transport services. That's what they do. So when the economy slows down, less volume for them to ship, Lanny, less things are moving, less revenue. Fundamentally, it makes sense that you'd see them tumble after saying a softer economy is on the way.
Exactly. So, Bert, they came out with earnings. They had adjusted profit that was up from last year, but missed those estimates, 451 versus 463. But Bert, they also increased revenue by 2.3% to 22.2 billion, beating estimates. Okay.
Yeah, all right.
The weird part was, and the tough part to see, was that margin was down. So even after exiting a lot of the Amazon business in the past, having an operating margin down, not just 10 basis points, 20, but down 100 basis points, full percentage, essentially, guys, down to 5.8%. Because, Bert, that's also unusual, because what have they been doing?
A lot of cost savings here. They've touted how they had 600 million cost savings in this quarter. It was a part of their larger Drive cost savings. Great naming, great marketing naming there with the Drive program for FedEx. Total, they've had $2.2 billion in cost saving. Think about that, lady. $2.2 billion in cost saving target is not moving the needle because they're just getting crushed on margin. Margin's going down. You can't save every cost. You can't cut every component of it down. So if it's going to cost more to ship, gas prices going up, you can't squeeze everywhere. And it's crazy that margin drops so much. I can't believe that.
And similarly, what you're with volume was up, like you were saying. Domestic was up 5.7% year over year. International volume was up 8% year over year. So you have growth. You have growth happening quarter over quarter. But now they're revising guidance based on really the margin squeeze, guys. Because, Bert, what's EPS dropping to?
It was startling how far this fell. Going into this, they had a range of $19 to $20. Not anymore, Lanny. That's long gone. Their new range for earnings is $18 to $18.60. So $1 earnings per share on the low end, $1.40 on the high end. That is a massive drop in savings. Didn't just stop there, though, Lanny. They didn't give revenue targets. They used language to explain what's happening. Before, revenue is going to be approximately flat for the year. Now, revenue is flat to slightly down, which I would not be shocked if next quarter it changes from to slightly down to a little bit more aggressively down or something like that. They are
really more down.
Yeah. They are shooting signs everywhere. Revenue top line's coming down. Earnings are going down. Margins are terrible right now. Even though you're seeing an increase of volume, we're expecting volume to decrease because of the economy, because of what's going on. They're putting less money into CapEx now as a result. They're tightening the purse strings, Lanny. So Mr. Market is punishing them. Mr. Market is punishing them hard. They are down 5% in the after hours on March 20th. Market hasn't opened because it's just the earnings were released after hours today. So you're going to see a lot of that reflected in our screener.
I mean, EPS guidance dropping 5%, 5% drop to the share price. How nice is that? So, Bert, we're going to have to run them right back through again. The Dividend Diplomat stock screener focused on the price to earnings ratio, the payout ratio, dividend growth, and the dividend yield based on that after hours market price, Bert. So, yes, FedEx, ticker symbol FDX. What are they trading at, Bert?
All right. In the after hours spot I picked, I'm going to put the image up here so you guys can believe me that it was there. $232.41. I picked the midpoint of the lower earnings per share guidance, $18.30. That gives you a price to earnings ratio of 12.70. Ironically, if you go back to our video on Monday, it was about the same price or anything. Their PE ratio then was 12.6. So the value has not changed. As you joked around a minute ago, Lanny, earnings fell, price is falling by the exact same amount. So the price to earnings ratio is staying the same.
Yep, guys, but that also means the dividend payout ratio, because the dividend's still the same. So the payout ratio is going up. It is now north of 30%.
Ooh.
A very safe dividend, though, guys. So dividend growth's not going anywhere. Dividend payments aren't going anywhere because, Bert, that 5-year dividend growth rate is 16.25%. And they've been increasing dividends for 4 years straight.
That's right. And their yield has jumped up to 2.38% now as a result of the price falling. We did some quick numbers here to adjust the year-to-date performance based on this after-hour spot and time. They're now down 17% if this holds year-to-date, 10% over the last 1 year, but they're still up 109% over the last 5 years.
Still a huge run up over a 5-year period. Having a tough 2025, no doubt, guys. So, Bert, what are you thinking with FedEx right now?
I mean, look, I think FedEx is becoming it's if it keeps falling, there's going to be some good opportunity. This bad economy, tariffs, economic uncertainty is never going to last forever. So you're thinking about what are the types of companies that can make it through this? What are the type of companies that are going to prosper on the other side of it? Shipping's not going to stop. So you're going to need FedEx. Even UPS you're going to need, despite everyone hating UPS. You look at their metrics, that 30% payout ratio is key to me, Lanny. You're not worried about the safety of that dividend. You're not worried about it because they have so much room. Earnings could be cut in half, Lanny, and still at the top end of our stock range. So if earnings still come in at $9, 50% of the low end of the range, if it's that bad, the payout ratio is still only 60%, Lanny. And to me, that is so
If it's not bad, that stock price will come down $100 a share.
That's fine. So for me, I'm not looking to buy FedEx right now. Maybe if there's another 10% drop, if you get them around that $200 share price range, sure. That's still a lot of room to go. And yes, Lanny, the earnings will probably fall at that point, and maybe the earnings per share will still be the price earnings will still be at 12.6x then. We'll see what's going to happen here.
That's too funny. I love it,
Yeah.
guys. All right, so Bert's looking at a $200 price target for FedEx. Wants a little more meat off of the bone here to even think and consider about a new position in a tough economy that FedEx is going through. The question is do you guys own FedEx? Are you buying FDX stock? If not, why not? If you are, what's your reason? Let us know in those gosh damn comments below.
All right, everyone, subscribe to the channel. Give this video a thumbs up. Little preview for tomorrow. If you haven't subscribed or at least get those notifications, we're doing a swag giveaway tomorrow, and it's not going to be contingent on the number of likes. There's just one thing we're asking all of you to do in this video. So if you want some free Dividend Diplomat swag, set your clock for 8 a.m. Eastern tomorrow. Watch that video and make sure you enter the contest because someone will be leaving by Sunday night with some Dividend Diplomat swag.
Oh, and could it be you guys? Again, like the video, subscribe to this channel. And Bert, I got one thing left to tell these jabronis. You're either with us or you're against us, Jack. That was Bert, the Hurt, and Lanny from the Dividend Diplomats. Over and out.